Hello, chart watchers, and welcome to this Friday, April 26th, 2019 Market Watchers live show with your hosts, Tom Bowley and Mary Ellen McGonigal. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Let's take a look at what's going on as we close out this week. We got the Dow Jones Industrial Average rebounding from earlier losses, currently up 28 points. The S&P 500 up 4. The NASDAQ down 10, but also well off its earlier lows. And the Russell 2000 leading on a relative basis today, up 9 points. 10-year Treasury yield moving lower despite some positive economic news we'll talk about in just a couple minutes. But you can see the 10-year Treasury yield currently down more than 3 basis points back to 2.50%. Volatility index, after rising above 14 yesterday, is now moved back down into the mid-12s today. So that overall downtrend continues in the VIX. That's good news for equity bulls. Leading to the upside today, materials, while energy is lagging, kind of a weird combination of best performing sector and worst performing sector, as many times these two will kind of go hand in hand. But it is what it is. We got semiconductors having a very rough day because of Intel. Intel reported yesterday, and I noticed Intel was the 5th worst performer on the NASDAQ in terms of percentage. And that's unusual because you usually have a lot of volatility on the NASDAQ. But Intel down more than 10% today. And energy getting hit because two of the bigger companies in the space, ExxonMobil and Chevron, did not impress traders. Both of them down today. I know ExxonMobil was getting very close a few days ago to overhead resistance near $84, and the stock failed there. And now with the report, the earnings report is a big miss on both revenues and earnings per share, and you can see that huge gap down on ExxonMobil today. Also, we've had a change in character on the chart on Chevron with the gap down from just a couple of weeks ago. Now with earnings today, you can see it continuing that slide to the downside. So it's going to be really tough for XLE to outperform when two of its largest components are trending in the wrong direction currently. Okay, Mary Ellen, it's been a couple weeks since you've been on the show because we had Good Friday and a holiday last Friday, but how have you been?
Oh, I've been well. Yeah, trying to stay on top of all these earnings. It's been actually kind of exciting.
Yeah, it has been crazy. I mean, we're getting big moves on, to the upside and the downside. And some of the companies, that look like they were invincible, and I'm thinking of like the Xilinx, heading into earnings, all of a sudden missing their earnings estimate. That's probably been one of the biggest surprises to me. Was the stock that was the highest StockCharts technical rank stock among large caps, falling short on earnings estimates. That was a shocker to me.
Yeah, that was a real doozy, and it's nice to see the stock getting some support in here today. There was a little bleed out into other semis, and they're lifting as well, but that was definitely a shocker. I agree.
Yeah, and I think, too, the semis really getting hit hard today, as I pointed out just a second ago, but this is a group that has been going straight up really off of that December bottom, and April in particular has been very strong. I mean, we started the month of April on the semis below 3,500, and we just traded 2 days ago above 3,900. We know they move fast, and they were moving fast to the upside, but this isn't so bad getting a little profit taking.
Yeah, they had 6-day streak, which was a record for this semiconductor index prior to yesterday's drop. So,
wow. Yeah, no doubt that's been a very hot group, but pulling back for sure today, down about 125 points. All right, well, we got a really packed schedule today. It's awesome having Mary Ellen back. Of course, we got the what's hot, what's not. We'll talk about that in just a second. But on your upcoming schedule here, you can see Greg Schnell will be joining me as a co-host on Monday. Aaron will be out, but Greg has agreed to join me, so we'll have a lot of fun on Monday. Aaron will be back on Tuesday with her workshop, and then Carl, Aaron's dad, will be with us on Wednesday of next week. So exciting schedule upcoming. But as far as today goes, we got what's hot, what's not. So, of course, that's going to be exciting. First 10 and 10 stock, Kratos Defense and Security Solutions, KTOS. That'll be an interesting chart to take a look at because defense stocks starting to make a move back to the upside after really struggling for a while. But check that chart out and see if you agree with me when I annotate it at 1250. And, of course, we'll look at 9 others. And then we're going to wrap up the show with this stock or that stock. We've done this before, Mary Ellen. And we've gotten a lot of rave reviews. I think everyone enjoys it. And we're going to put a little twist on it this time. We're going to look at companies that are going to be reporting earnings next week. And so this is a little different flavor because we're going to try to figure out which of the two stocks that we give each other, which one would you hold into earnings? And
that's a landmine.
Yeah, it is. I don't hold stocks into earnings, so this is for fun. Right. Don't anybody get too carried away, but
don't get any ideas.
Exactly. All right, let's get into the economic reports. I tell you what, there was a big one today, and this was not small potatoes. Q1 initial GDP came out 3.2%, way above the 2.3% expected. So we're seeing stronger growth than expected, and that's why I was a little surprised by the reaction in the Treasury market with the yields lower today. I would have thought this stronger GDP would have had yields moving to the upside, but that is not the case, as we'll look at in just a second. April consumer sentiment also came out this morning at 10 a.m., and you can see that was a slight beat, 97.2 versus 97.1. And as we take a look at the chart on the 10-year Treasury yield, this is what I was talking about. I'm not going to be too excited. Well, I shouldn't say this because it seems like the market is really becoming more and more fascinated with the fact that we've got stronger growth and lower interest rates. And I agree that's a nice combination to have. And I don't know if you have any thoughts about this, Mary Ellen, but I'm thinking that the 10-year Treasury yield moving lower with some decent economic news is just telling us that inflation is not a problem. And maybe deflation is perhaps the bigger problem that the Fed maybe needs to be thinking about. Do you have any thoughts?
Yeah, no, you're absolutely right. The inflation is dead theory, if you will, has been floating certainly more prominently here recently. And it is definitely a possibility. Yeah.
Yeah, no doubt. And I think the strong dollar is what's putting the downward pressure on commodities and keeping the inflation issues, if you will, at bay. There really aren't any. But let's go into earnings because there were a ton of earnings out again last night and this morning, and we're just getting started. Next week's there's going to be a flurry of earnings activity next week as well. But you can see on your screen some pretty big numbers. I mean, that Amazon number there is pretty amazing that they can beat earnings with the size of that company. To be able to blow away our earnings expectation like that's pretty impressive. I also noticed T-Mobile. That was a really nice report. T-Mobile, Illumina, not only beating on the bottom line, beating on top line, raising guidance. There were some good reports. But on the flip side, you had ExxonMobil and Chevron in that energy space. Traders just not liking what they saw from those two companies and their forward outlook and so forth. So energy struggling today as a result of that and the fact that crude oil prices are lower. But let's take a look at a couple of these earnings reports. First, I want to pull up Intel. Let's take a look at what's going on here because this is a kind of a big deal. Semiconductors, as we talked about, have been very strong. One of the reasons has been Intel. I mean, Intel hasn't been the top performer. If I go in here and show you the relative chart, I think you'll get a little better sense. So here are the semiconductors moving higher. Here's Intel moving higher, but Intel divided by the semiconductor index has actually been going lower. So was that a warning? Well, it turns out in hindsight that it was, with Intel coming up short on its estimates as we I'm going to try and pull those up. Yeah, they guided Q2 revenues and earnings per share lower, and fiscal year 19 revenues and earnings per share lower. So it wasn't so much about last quarter, it's about their future guidance. In the prior quarter, they did report revenues slightly above expectations. Their earnings were 89 cents versus 87. It was the guidance that created all this selling today. So I think Intel's got some work now to get back up and repair, but there are a lot of healthy companies in that semi space. So I believe semis can go up higher without Intel. I think the fact that we've continued climbing with Intel underperforming on a relative basis is certainly confirmation of that. But Intel, nonetheless, you can see not a good day here for this stock. Amazon. Now, I made a bold prediction yesterday, and it wasn't correct. But I did make a bold correction. I thought Amazon could go up 100 points on its earnings report. I just liked the way it was trading. I liked the fact that we were getting a relative breakout in the broadline retailers versus the earlier high that we saw back in January. You can see Amazon relative to the S&P 500 had moved up to a multi-month high. So I was just thinking that there was something building here for Amazon. And the stock did gap up. I mean, it's still up $15 today, but it's down about I don't know, $10, $12 from its open. So we didn't get quite that positive response, but it still was a nice response nonetheless. Amazon remains healthy, technically above its 20-day moving average. And of course, the broadline retail group continues to move higher as well. So that's all good news. Starbucks reported last night. You can see Starbucks initially a little bit of downward pressure. Buyers came right back in at that 20-day moving average. Restaurants and bars continue to move higher. Really, over the past 10 months, Starbucks has been one of the stars, if you will, of the restaurant group. So I think the fact that you went down, held technical support, I still think looks good here. I like Starbucks as we go forward. T-Mobile, I mentioned that strong report. We did get a gap up earlier and take out this triple top. So I think that was good news. We came back down from that, though, hit the 20-day. And if we finish strong today on T-Mobile, I think that would be a really good sign for the stock. Illumina, I mentioned, with their strong report, but notice they didn't really get a strong reaction. They beat top line, they beat bottom line, and then they guided their fiscal year 19 earnings per share higher. And yet the stock's going nowhere. The reason? Look at what biotechs are doing relative to the S&P 500. I think you still got a really good stock here with Illumina, but when biotechs are completely out of favor like this, and it's been like this so far in 2019, another way to look at this is if I go in here to the dashboard and we take a look at the industry groups, and I'm going to do the table view, and let's do year to date. And I'm going to go down to healthcare and take a look at biotechs. Biotechs are up 3% this year. So if you're wondering how you get that negative, I'm going to go back over here and take a look at this on the relative chart. But if you're wondering why Illumina is struggling and how you get this relative line like this, it's because biotechs are only up 3+% on the year when the S&P 500 has been rolling to the upside. So this is just a group that's out of favor. And I think that's why you're getting this kind of reaction on Illumina. If this was in a stock or a stock that's in a space that was being treated much more favorably, much more bullishly, I think you'd have seen a much different response to this report. But the good news is I think the trend line that's been building the last few months on this stock, even though biotechs have been going lower, you can see Illumina's been going higher, and that's the reason we have this outperformance. So this is one of the better stocks in the space. Good, solid report, and I actually like that reversal, that hammer on the 50-day today. I would not be surprised to see some more upside out of Illumina. XOM. All right, ExxonMobil. I don't like this, and actually if we go over, I'm going to pull this up on another chart because I think we have a negative divergence on XOM as well. We do. Higher prices. Look at the PPO going lower. Negative divergence, big earnings gap down below the 50-day. I think if ExxonMobil doesn't recover here today and get back up above that 50-day, I think we could be in for some more weakness. Next major support level, I think, is going to be down around that 78 level. So that's what I'd be looking for here on XOM. CVX, this one, a character change. Now, if you look at CVX, we were breaking out to highs that we had not seen in the second half of 2018. We're actually making new highs. If I go back to ExxonMobil, you can see this one was not getting back up to those highs. So I think on a relative basis, when we look at ExxonMobil, even though it was doing pretty well versus its peers, I wanted to go back here. Let's go to CVX. CVX was much stronger even than XOM back in March. But over the past 6 weeks heading into this earnings report, we have seen complete deterioration on Chevron relative to its peers. And look at the volume coming in. I think that is further confirmation. There's distribution taking place here. I don't like Chevron, especially with this breakdown with earnings. I see this gap support maybe down just below 114 as your next area of support. But until we get back up above the 20-day moving average, I'm nervous because of all the selling that's taking place here. All right, I'm going to turn it over to you, Mary Ellen. I know you got some upgrades and downgrades. Why don't you take it away?
Sure, you bet. And interestingly, there are quite a bit more in the way of downgrades. And I understand it's been that way for a little bit here, certainly for the last couple of weeks. But let's go ahead and get started with some of these upgrades. And the first name that we're looking at here is Consolidated Edison, of course, a major utility stock. Analysts are raising guidance for the stock. Earnings are due out next week, and I am pointing out to you here, this is a daily price chart. We can see that the RSI is trending upward above that 50. MACD just poised to have that black line cross up through the red, positive signal. It's above that net neutral zero, and I've annotated it. It's forming a base here, poised to break out of this 6-week base. And interestingly as well is the fact that utility stocks are coming back. These stocks faded a bit as growth has been coming on a bit more strongly. But for instance, Edison does yield a 3.5%. So when you look at that 10-year dropping, there's another reason to potentially like this stock. Another upgrade today is ITW, Illinois Tool Works. And this is a company that actually came out with earnings that were 10% above estimates, but the stock price dropped. So it's getting a little bit more traction today with that upgrade. And this is another one with a yielder, 2.6% yield. But we can see the RSI never really got negative. It is trending back positively. And the MACD did have that negative signal crossover. However, it is above this net neutral zero. So overall, the stock is finding support at an upward trending 50-day simple moving average. So we're going to want to see that continue to wedge higher after that analyst upgrades. CLF, this is a Cliff. Let me just make sure I can get this ticker symbol in here. And where this is another company upgrade. Let's much better. Okay, so this is Cliff Natural Resources, and we can see that the stock is trying to inch its way up. They did come out with earnings yesterday that were above estimates. This is a company, however, that if you look at it technically, it's finding resistance at this flat 200-day simple moving average, and the RSI is just trying to trend upward. MACD still below this net neutral, so it's not looking very attractive, but they were upgraded today. We can also take a look at ARGO. This is a company, Argo Holdings. You can see the gap up today, 1.5% on the upgrade. Earnings are due next week for this stock as it continues to march to new highs. RSI and MACD are positive, so it is in a confirmed uptrend. We can also take a look at CASH. This is a financial group. Take a look at this big move. It's up 13% today. They also came in with earnings that weren't really that healthy, but analysts are revising the stock upward. Your RSI very much in positive territory, as is the MACD. We're now up above this 200-day. So we could pull back a little, but it does appear as if this downtrend here is being reversed. And we could take a look at one other on the upgrade side. This is Consolidated Communications, really tough. This company came out with earnings, but it's just gap down. It's not even up on today's upgrade. It's down another 3.5%. So really a very, very ugly chart. I think I'm going to move forward to our last upgrade here. MAS is Masco. And this is another one that came out with earnings yesterday, but they were very weak. Analysts came in and decided to upgrade it. It's up 4%, but we're still below this 50-day simple moving average. The RSI is in negative territory, and your MACD is heading down, so it's not a very attractive looking stock. I just have a couple minutes here. We'll do some of these downgrades. AUY, this is a gold stock, and this is a company where earnings are due next week. Let's see if I can update the chart here. And you can see that the stock really is not doing quite well. It's down in this downtrend. It's trying to reverse. Nice pickup today, 4% on the upgrade. RSI is poised to turn positive, but your MACD is very much in negative territory. Not such an attractive stock. But we want to take a look here at FedEx. This is a downgrade. UBS downgraded them, and it has everything to do with their fears about a slowdown in global growth. So the stock is down 2.5%. You can see RSI trending below that net neutral. MACD has a negative crossover, and your longer-term moving average is in a downtrend. So overall, FedEx does not look attractive. One last name that we can take a quick look at here is Starbucks. Tom was talking about the company earlier because they did come out with numbers. However, analysts are a bit not so impressed by the numbers because as the earnings and sales were there, the traffic numbers, same store sales were not there, especially in their new market, China. But interestingly, so far, the market is shrugging the downgrade off and it is finding buyers on the pullback. And so there were some other names, Western Digital and Group One, that you can take a look at that were also downgraded. So that's it for upgrades, downgrades.
Sounds good. I'll tell you what, you're right. I know Aaron talks a lot about the fact that we've had so many downgrades, and I think a lot of that has to do with the fact that we've come up so far. I think a lot of them are just valuation downgrades. I mean, I think
that's true.
I think psychologically, when you see a stock that's gone up, 40% in 3 months, wouldn't you downgrade it and say it's gone too far fast?
Right. It's done its thing.
Yeah, so I'm not too surprised by it. Yeah. But anyway, we're going to get into what's hot and what's not next. And I know, Mary Ellen, you have a bunch. I have a bunch. And once again, we're going to focus mostly on the what's hot area because the market, of course, has been so hot. And there's not a whole lot of reason to focus on the negatives. But I'm going to let you get started. What do you have this week for what's hot?
Yeah, so it's really an exciting time in the markets, I have to say. And as far as what's hot, it is a theme that you've heard me talk about again and again, pretty much every week since the markets turned earlier this year. So it's computer software stocks. And the reason I'm really excited about them this week is because they, not particularly this first one that we're looking at, but a lot of software stocks pulled back. Certainly last week, they really looked rather, it was very ominous looking. And then a number of software stocks were also just treading water, marking time. They've really kind of exploded to the upside this week. The first one that we're looking at is Manhattan Associates, MANH. We're looking at a daily price chart. This is all about earnings. Take a look here. They gapped up. Not only were earnings strong, but analysts raised estimates. And these guys work in the retail industry as far as helping them with inventory, supply chain, it's cloud software. But we can see that the stock is a little bit overbought up above this 70, the RSI. And we can see that the down below, the MACD, is up here in positive territory. But net, we've had this gap up. Oftentimes, stocks will mark time before potentially advancing further. Let's take a look at another software stock, UPLD is the ticker symbol. This is another cloud-based software. Also, this is not earnings related, but we can see this gap up here. The company acquired PostUp, which is an email and media management company. And the company came out and guided estimates higher based on this acquisition. So the stock is very much in an uptrend, finding support at this upward trending 10-day simple moving average. RSI is positive. MACD had this very nice black line up through the red positive signal crossover. We can take a look at VRNS, which is another, this is a cyber security stock. And what I would like to do is, I was going to go ahead and see about pulling up the weekly on this because it is particularly attractive. You can see here, because what I'm pointing out to you, the red line is your 50-day, blue is your 200. And upon this analyst upgrade, we can see the stock is actually up almost 11% for the week, but it has broken up above that 200-day simple moving average. Your RSI is positive. MACD just poised to turn positive. So I really like this. I think it's potentially going to have more legs as far as continuing to form the right side of a base. This next stock is ServiceNow, and this is an example of companies in software that I talked about that were really marking time. Take a look. This is this gap up in earnings in February. It inched up a bit, but by and large really was in a go nowhere environment until they came out with another strong earnings report. Subscription rose 36% year over year. They're making great headway with very large contracts. RSI is positive. Your MACD, take a look at this beautiful crossover, black line up through the red after the stock really did not go anywhere for quite some time. So expect further upside for that. AZPN is another software company, and this is another company that gapped up. Their revenues gained year over year, and their licensing and maintenance contracts, so they're on a tear as far as growth. And we can see that the RSI is up here above 70. So that's telling you that it is overbought. It can remain up there for some time, but it's with an eye toward at some point, some sort of, at the very least, pullback. MACD is up here positive. So we have an uptrend going there. See how many other, because I do want to get to other areas that are also hot this week. But this is Twilio. This was a big winner in the cloud software space. And let's see if I can get that chart going. So here we are. Here's the daily chart. This is another one. I talked about some of these big winning software stocks pulling back, but it's come to life a bit here more recently. It's inching up about 1+% each week, each day, as analysts continue to raise estimates. The company is due to report earnings next week. I'll take a look at a semiconductor stock because that's an area, while some names have been getting hit, there are some winners here. This is Silicon Lab. They jumped almost 18% following the release of earnings. CEO came out and was optimistic about the future. And we can also take a look at one other semiconductor stock that was positive this week, gapped up. This is Lam Research. Earnings and revenues beat, and you can see this gap up. RSI is positive, as is the MACD down below. And I just have time for one other name because it's worth noting, and it is Twitter, TWTR. The company came out with numbers that really surprised a lot of people. Take a look at this gap up. Their number of active users increased, their ad sales increased. This initial surge here was 15%. It's pulling back a little, but that's a nice gap up. Take a look at the volume there. RSI and MACD are both positive.
Yeah,
So, Tom?
I was a little surprised by Twitter's report, as I was Facebook, because they really hadn't been performing very well on a relative basis. I mean, you can see Twitter definitely had improved off the March low, but its April high was not even as high as its December high. You know, it hadn't broken out. And so I was just a little concerned maybe that they would disappoint. But that was a nice candlestick with the heavy volume with earnings on that move to the upside. And I think this pullback could be an opportunity, especially if it gets closer to that $37 level. Yeah,
and it was all about how are they going to monetize, and they're coming through now with their ad sales, and it's starting to take shape.
Yep. All right, I'm going to take a look first at the broadcasting and entertainment space. I mean, this is a group that has been doing extremely well, really throughout April. You can see the huge move, but this week in particular, another breakout to the upside. So what stocks are leading that move? Well, pretty easy. It's Disney. Disney's a big part of it. Ever since they came out and announced their Disney Plus service for $6.99, we've seen Netflix really struggle to go anywhere, even though they said they didn't think they'd be impacted much by Disney. But Disney continues to take off. I think that the market is telling us that they are going to take some share away from Netflix. And a stock like this that had been going nowhere, multiple tests up around 117, 118, couldn't break through, literally trading mostly in about a $10 range for months on months. And then all of a sudden now, over the past month, we've gone from 107.50 to 140. So Disney has been on fire. Disney continues to trade well, and any kind of a pullback, I think, is a viable pullback on Disney. Clearly, great-looking technicals here. Next up in the same space, Discovery. Discovery's had a really nice week after testing that 20-day moving average. It would be closing, based on where it is right now, it would close at about a 5-month high if we can get this close where it is currently. So DISCA also making a nice move. How about Charter? Charter coming off its 20-day moving average, trying to break out. I see an uptrend, a cup, a handle back to the 20-day moving average, and now a threat to break out. CHTR has been hot. Now a small company in this space that is having a good week, but I'm a little concerned about, is Eros International, EROS, mostly because you can see a downtrend here. So yes, we are getting a move to the upside. Yesterday's volume very light. Today's volume very light. I would be careful if you get a reversal. So just because a stock's been hot for a week, I think you can tell looking at Eros versus the others I just showed you, this is a stock that I would be really careful if it reversed, because the fact that we were in a downtrend, heavy volume, And now we're getting this light volume move back to the upside. I think you have to be careful here. Next group that I think looks good is, and I'm going to pull up the publishers. So let's take a look at the publishers on a different chart. And you can see the breakout here. This is a really nice looking chart after uptrend, sideways consolidation for 2 months. Now we're getting a breakout. So what looks good here? Well, I'll give you a couple of stocks that have been doing pretty well this week. Morningstar, one negative here, light volume. So if the volume doesn't bother you, I think the chart looks great. I wouldn't trade it because of the illiquidity. A couple of others maybe in the space. They're more liquid, though. A little bit more liquid here. FactSet Research, FDS, beautiful move up. Look at the last 4 or 5 days. Really strong move over the past week. INFO, which is IHS Market. This is one that's just breaking out. You can see on this move and on this breakout, I see a cup, a little bit of a, lengthy handle, but then a breakout with increasing volume. So I think this is a stock that could move maybe up into that 58, 59 area short term, but I think longer term, that breakout is bullish. Okay, what else do we have? How about the toys? So let's go over here and let's pull up the toys. All right, DJUSTY. Now, we've had a strong week, but we've got overhead resistance that we need to negotiate. We've had multiple tops on the DJUSTY, Dow Jones U.S. Toy Index, right at about this 840, 850 area. Multiple tries to get through. We've still got some room to get up to that level, but that's a key area that I would be really careful about. So what in this group has been strong? Hasbro, look at that move up with earnings. Beautiful push, heavy volume, all of a sudden breaking out of this sideways consolidation on a relative basis. When you look at this downtrend, I'm seeing a complete change in character here on the chart. So even though toys have not broken out, you can see Hasbro is one of the better performers. So if the toys index can make this breakout, just keep in mind Hasbro is one of the leaders now. Next up, Glue Mobile, GLUU, also in that toy area. Nice strong week after we had pulled back, little profit taking following a breakout in March and April. I think it's just range bound currently between about 10.25 and maybe 11.60. But we have had a strong week. Watch to see if we get a breakout here. And again, this is a strong stock relative to its peers. Next up is going to be the broadline retailers. So let me pull that up. DJUS RB. And the broadline retailers made a strong move earlier in the week, just kind of holding those gains right now, but it's been a pretty good week for the group. And inside this space, I would take a look at, JCPenney has had a really strong week. But, I mean, again, we're talking about from $1.26 up to $1.32. So on a percentage basis, it's up there. But we've got a pretty serious downtrend, and I'm not a huge fan of JCPenney, but it has been one of the better performers. Wanted to mention it. Amazon just reported. I think the stock continues to trade really well. It had broken out. It's holding its 20-day moving average. Still looks good. Last one I have for the hot stocks, and I think this might be the best one out there in terms of the broadline retailers. Ollie's, love the volume that's come back into the stock end of March into April. And when we pull this one up on a relative basis, it had kind of fallen asleep for a little while, but it is starting to roar back on a relative basis, has been doing that for about the last 5 weeks or so. And the overall resistance comes in at 97.50. We just tested that, pulled back, a breakout above 98, especially if volume accompanies that move. I think that would be really bullish for Ollie. Okay, Marianne, I'm going to pass it right back to you. What else do you have for this past week that's been hot?
Oh, you bet. Okay, so what we are going to now focus on are areas within healthcare. And for those of you that follow the market super closely, you'll know that a number of healthcare stocks have gotten really hit on political headwinds out of DC, potential policy changes relating to healthcare coverage. So let's take a look at some of the names that are bouncing back. This is Tandem, TNDM. This is one of last year's biggest winners on in the stocks as far as performance. It really didn't get hit too hard in the bear market, but we can see this news did hit it. We're looking at a daily price chart. the potential Medicare for all came into play back in here, but more recently the stock is starting to turn. So this is constructive. We can see the RSI just poised to turn positive. The MACD, once we have that positive black line up through the red and we break up above zero, this could be a very interesting stock. Let's take a look at another company. This is another one that was a big winner last year, fell out of bed, but is coming very much back into favor. Align Technology. These guys do the Invisalign. This drop here was all about earnings, but let's take a look at where we are here more recently. The company reported numbers. They were flat, but they guided higher for this year and next. Estimates are revising, or analysts are revising estimates up. Stock is up 5% more today. RSI is very positive, and your MACD is up here above this net neutral zero. We've broken up above that 200-day in a very constructive manner. Another bigger name in healthcare is Boston Scientific. BSX is the ticker symbol. Let's see if I can get that going. And this is a company that is also up relating to earnings. We can take a look at it here on the daily chart, and the stock has had a very significant move up. Now, this drop, again, is all going to be about Medicare for all and uncertainty about policy, but it is starting to reverse following their earnings. Let's go ahead and move on to another area within healthcare, and this is going to be healthcare insurance stocks. These are the companies that have gotten hit the hardest with this latest downtrend in some of these healthcare names. Again, taking us back, this is Magellan, MGLN, a health insurance company. Gaps down, gaps down. Now, here we can get a feel for, this is a daily price chart of the stock potentially turning. They are due to report their earnings yesterday, but when I look for stocks reversing downtrends, I want to see a break above not only that 50, but up above that 200-day simple moving average. Once we break above this point here, the stock is much freer as far as being able to continue to reverse that downtrend. RSI is positive, MACD up above this net neutral, and we're getting some pretty decent volume here, so that's quite encouraging. Another healthcare name that is up this week after being battered is ANTM, and this is Anthem Blue Cross. Take a look. They really got hammered. These guys were not should not have been impacted quite as much, but they were. So they're trying to reverse from this super oversold position. We can see MACD down here potentially trying to cross. We will want to see it get up above this zero. We want to see the stock price up above these moving averages before getting bullish again. RSI still is not quite there, but we are seeing an attempted bounce here from the bottom. One last name that we can take a look at within healthcare here is Humana, HUM. See if I can get that stock up here. And this particular company is also due to report next week. And we can see a big similarity to a lot of these other healthcare companies that really got beaten down, got hammered. They're trying to reverse these downtrends, but they do still have a lot more in the way of work. We can see these former head fakes because they coincide with the resistance that they're finding at these moving averages that are now trending downwards. So these companies, when you go back to prior to the Trump election, there was a period in August where Hillary Clinton was coming out with policy changes and healthcare stocks really got hammered for quite some time. So we could very well be in a similar period. Let's take a look at some other companies here, because these are stocks that are also doing well, and they're in the beverage space. First one that we can take a look at is Boston Beer. This is SAM. Revenues jumped 8%. They're doing a lot of in the way of innovative products. Standard beer companies are not doing well, but those that are embracing craft and newer beer products are. And so we can see the stock broke up above this 250-day. RSI is positive. MACD had that positive crossover, and it's poised to turn positive. So this is a very constructive looking chart, even more interesting if it breaks above this prior high. We can take a look at STZ, and this is Constellation Brands. Take a look at this big move this week. It's all about cannabis. The company bought a 38% stake in Canopy Growth Corp, CGC, and this month, CGC agreed to buy a pot seller, Acreage Holdings, once pot becomes legal under U.S. federal law. So all of that is helping STZ having a nice advance, reversing this downtrend quite nicely. And then MNST, which is of course, this is a beverage. Oh my goodness, I'm trying to think of the name, but they have energy beverages. And this is a gap up here on earnings, but then it really fell out of bed subsequent to that. And they are due to report May 2nd. What happened here is Amazon announced that they are going to be introducing their own energy beverage line, but they are gapping up here ahead of their report next week. RSI is trending positively, as is the MACD. So I think I have to leave it, or I will leave it at that.
All right. Yeah, it sounds good. I mean, went through a bunch, that's for sure. And of course, we are seeing a lot more hot stocks this week than stocks that are not hot. But there have been some weak areas. So I'll go ahead and start off the what's not. And in order to do that, first, I want you to see what has been hot, which is causing some of the not hot. And it's the dollar. The dollar over the past week, I mean, if you take a look, this has been a nice move in the dollar index, clearing overhead resistance at 97.5. And you say, well, what's the impact there? Well, when the dollar's rising, that puts a lot of pressure on energy and materials on a relative basis. And those are the two groups really that have struggled over the last week, even though we saw earlier that materials were having a good day today. Overall, over the past week, they have not. So here's your XLB, and you can see this move down coinciding with that move higher in the dollar. Now, so what has been weak in the energy and material space? Well, in the energy, I'm going to start with CLB, which is Core Labs. Big move down here. You know, when I look at a stock like this, yes, it was hot, a little bit hot before that. You know, you can see this move up, but look at the relative strength here. First of all, the group has been going lower, and this is a stock that is one of the weakest within the group. Now, when you see this little bit of a relative breakout here that the stock had just about a week ago, this is why when I look at a stock and I see it start to show some strength and it makes a breakout, I always say you want to make sure you keep a tight stop on a stock like this. This is the reason why. Because if the stock is in a group that's out of favor and it all of a sudden loses its technical support, this is easily what can happen. The selling escalates and the stock moves lower. So that's one of the reasons why I'm staying out of energy and materials for the most part. And I've got some more examples here. Let's go into Halliburton. Same thing. Couldn't get through resistance here. Another stock very weak on a relative basis. It breaks down, volume picks up, and now it looks like probably 27.5 coming up. Next, whoops, wrong one. Let's go back. Let's take a look at Schlumberger. And I'm just going over some of the bigger names here, but there are obviously a lot of energy stocks that are not performing well. Schlumberger broke out and then couldn't hold it once again. And you look back and you see why. This is not a strong area of the market, continues to weaken. And so when they lose support, you get a lot of sellers because folks get antsy. They want to move it into areas where we're outperforming the S&P 500. Now, of the ones I've shown you so far, this is the one that pulled back, the only pullback I think that looks interesting. And I want to see it close back up over the 20-day. Really nice strength here, easily clearing prior highs. Pull back to the 20 days, worth watching. A couple of others in materials. First, we'll go into Freeport-McMoRan. We did have a breakout here as well, but once again on the chart, when you look at its overall group, not very strong. So breaking down below the 20-day, not a good sign, certainly not below the 50. And we're now back at 2-month lows or month-and-a-half lows, so not good here. Dumont Mining in the gold mining area, take a look at bad week here. But with the dollar moving up, gold is probably the last place you want to be looking. Finally, in industrials, we did have delivery services very weak. We've already touched on this a little bit today. There's UPS. I can pull up FedEx. You're going to see very similar looking charts. These charts do not look good. In diversified industrials, you've got 3M that came out with an awful report yesterday, clearly having a rough week. And in commercial vehicles, you've got Caterpillar and Deere, CAT, It is bouncing back today off the 50-day and off of recent price support. I'd be careful, though, if it closes back below 135, as this one on a relative basis, you can see, has not been performing well relative to its group. The one that actually maybe is a little bit better is, or maybe a lot better, is Deere. So this one broke out to a new high and has pulled back. So if I was going to play either one of these two, I actually like Deere better. Look at Deere relative to its peers. Much, much stronger stock. Okay, Mary Ellen, that's what I have for what's not. What do you have?
Yeah, so pardon me, we do have a couple of themes that are going on in the what's not arena. And the first area that we're going to be covering is technology. And in particular, we're going to be taking a look at some of these networking, actually data storage stocks. The first one here is Seagate, STX. We're looking at a daily chart. And what's happening within data storage is there's declining PC shipments, and that these PCs normally need these high storage data devices that these companies provide, but demand is dropping. So lack of demand for their products. And so we can see this big drop down. It's down another 3% today. STX actually yields 5.5, but that's not going to overcome this recent deterioration as analysts revise estimates lower. Let's see if we can go ahead back, and I'll show you a couple of other names that are in this computer storage space. NTAP, many of you may be familiar with this one. And this is Network Appliance, another one that is deteriorating on the analyst concerns and downgrades. And we can see that the RSI is poised to turn negative here. Stock is just poised to break below this 200-day simple moving average. It may find support. Buyers do seem to be coming in. We've had this negative black line through the red crossover, but it's still in positive territory. So this stock can potentially recover from this, but it is certainly worth noting. And then one last name is Western Digital, WDC. These guys were downgraded today, and we can see, in fact, the RSI has turned negative. The stock is finding support at this upward trending 50-day. Buyers came in on the dip, so it'll be a matter of time to see if the stock continues to deteriorate or if it is able to recover. Let's take a look. There were some other areas in consumer staples, for instance, where they are also quite specific as far as the area. The first company I'm pulling up here is ELF. This is a beauty products company, and wow, it's up 6% today. So that's encouraging because analysts have been raising earnings estimates down. So there must be news relating to this nice pickup. So we can actually, in essence, erase that this was not hot this week because the stock is finding support. Let's take a look at another one that's in this space, EPC, Edgewell Personal Care. This one's a little more, certainly less healthy looking. We can see where it had this downtrend reversal attempt, found resistance at this 200-day simple moving average, and since then has generally been deteriorating, now broken below all key simple moving averages. RSI is negative. MACD is poised to go below this net neutral. This is Edgewell Personal Care. Very, very dismal single-digit low growth numbers for the company. IPAR is a company. This was a really big winner going back into last year, Inter Parfums, and the stock is breaking down. What they did is they pre-announced their 2019 sales, and the street did not like what it's heard, but this is another one that is bouncing today. So that's encouraging. There may be news. One last one in this space is a company, iRobot, IRBT. This particular stock came out with earnings after the close on Wednesday. Take a look. Their sales missed. They're down now about 12+% on the week. This had been a really big high-flying stock. They had good numbers last quarter, but not so. Big volume. Looks like it's going to potentially have more downside ahead. Lastly here, we can take a look at some of these tobacco stocks. This is a real theme simply because straight tobacco cigarettes sales are really and have been in a decline. Take a look at this deteriorating scene. Another daily price chart. This is Vector Group, VGR. down again this week. They're estimating cigarette sales to continue to lag. We can take a look at Altria, MO, formerly known as, let's just see if we can get this proper ticker symbol here, Altria Group, another one that is gapping down. These guys came out with numbers. Q1 sales were below estimates. Again, cigarette sales lagged. And they are in the cannabis space with CRON, but it's not as vibrant as Canopy as far as the prospects for the company. And then one last one is TPB. This used to be a big winner. It's Turning Point Brands because they have a lot in the way of herbal cigarettes that were attracting a younger audience, but it too is finding deterioration here. Analysts are lowering estimates ahead of their earnings report next week. So that's it for what's not hot.
All right. Sounds good. A lot of stocks we went through on both the hot and the not hot side. Wow, I tell you that, the market continues to push to the upside. A lot of areas of the market doing well, but still there are pockets where we're not seeing, movement to the upside. We're not seeing that same type of, move
upward
with
momentum.
Yeah, not having the momentum, and some.
Yeah, I didn't even get to airlines. There are a bunch of them are getting hit this week.
Yeah, what do you think overall of the transports? I mean, railroads obviously have been very strong, but truckers and airlines have been lagging a little bit. Do you have any thoughts? I mean, do you like
Yeah,
that?
I mean, you have to think some of that's going to be oil related. With the price of oil continuing to increase, these guys are going to be more dependent upon that. But some of the airlines that are getting hit, it has to do with competition in their space. International airlines are getting hit with Brexit and trade war news. But those rails, boy, you just cannot deny they are things of beauty.
Yeah, they are. They're on fire, and it's one of my favorite areas of the market, no doubt. And because the railroads ship in North America, I think that speaks to the maybe the outperformance, or not really outperformance, but the better economic conditions maybe in North America than maybe what we're seeing in other parts of the world, because railroads obviously are not shipping across the ocean. They're only shipping in America. All right, we are going to move into the 10 in 10. First stock today is Kratos Defense and Security Solutions. So let me jump in and see if you agree with what I did here. There's a lot of things I like about this stock right now. Number one, obviously, the price action. This could have been in our what's hot part of the show. Obviously, there's been a lot of stocks, but this one has made a really nice move from 14.5 now. Today's move up to 15.75. So this is a really good, solid week that the stock's having. And you can see the failure at the 20-day moving average multiple times, and now we're getting through. That's a good sign. Defense stocks. Look at the double top here. This almost looks like a bottoming head and shoulder pattern to me that was executed here in this past week to the upside. Another positive there. When we look at Kratos relative to its defense peers, it was actually one of the strongest stocks into February, and it was just trending lower as the overall group was moving lower. And you can see on a relative basis, the defense group put in a double bottom, a relative double bottom to the S&P 500, and is now starting to move up again. Kratos versus the S&P has broken out of its downtrend. So there are a lot of positives I like here. The only thing I would say is, when I was talking about the energy earlier, when you've got a stock that's in a group that was underperforming, I just think you need to make sure you keep your stop in play in the event that it rolls over. So I think this $14.50 to $15 area, I want to watch really closely to the downside. There's no reason at this point for this stock to roll over and to head back down below there, especially given the overall relative weakness in the group. You don't want to go back down below those lows. So I would just be careful and monitor that level. Otherwise, I think this is a stock that actually off of this uptrend could be starting to put in that rounded bottom and could start to maybe make another run at the highs that we saw back in February, maybe closer to $18.
Very good. And then the next one is cybersecurity, CYBR, CyberArk.
Yeah, CyberArk. Wow. Yeah, really nice stock. And it's in the software space. I like to trade stocks that are in the best areas of the market. So when you look down here at software relative to the S&P 500, I don't think there's any doubt that software is one of the best areas of the market. And if you've been watching the show for a while, we've been talking about software for months and months being one of the strongest areas. So I trade a lot of software stocks. I don't own CyberArk, but certainly on a test of the 20-day moving average or a price support area, it would make sense. I like the stock. As far as annotating where, I think, going back and just highlighting these 20-day tests, I think that's probably, when we look at all of these various tests that this stock has had, they are all successfully holding at the 20-day moving average. Until that changes, I would stick with that trading strategy. So I like it on a 20-day test.
Very good. And then we have TER.
Teradyne, yep. Yeah. I like this one too. Let's get the chart up. Yeah, another big breakout here. Look at the volume coming in. I think this is a super looking chart. It was one of the leaders already. I mean, if you look at the higher lows coming across here, even the higher highs, the last 6 months, this has been a pretty strong stock in the semi space. So talked earlier about the fact that Intel was moving lower on a relative basis. This one actually is now breaking out. So that's the difference. When you got the solid report here, you get this gap up, you got one of the stronger performers in a strong group. There's no doubt in my mind that Teradyne is one that I would be interested in. I think you've got the bottom of gap support there and the top of gap support right there. That's the area I want to watch. You've got the 20-day coming up underneath. Really nice looking chart. I like Teradyne.
Very good. And then we have VRTS.
All right, VRTS, Veritas, right?
Yes.
Okay, another breakout. This is Vertus. I thought there was a Veritas. Maybe, I don't know if that's.
I think Veritas is VTAS. This is Vertus Investment Partners.
Okay, yep. Yeah, as soon as I saw the volume, I was like, okay, that's not Veritas. But anyway, I'm a little concerned about the lower volume here, but the overall chart pattern I think looks great. After the move in February, you can see a nice low ABC correction back to the 50-day, and then we take off again. Solid volume trends, just not overall great volume. I think if I was looking at this, I would be paying attention mostly to the fact that it is one of the best stocks in the asset managers group. But we've talked about asset managers being a very poor area of the market. So again, if I like this stock because it's performing well, one thing that I would pay attention to are my key support levels. Because being in the weak group, you don't want to break down. You do not want to break down. So I'm going to just draw in a level here. And then also the last little pullback that we had was at about 116, 117. And that rising 20 days coming up from underneath, I'd want to see that hold. So just want to be a little careful here.
And we have Anthem Blue Cross, ANTM.
Right. Yeah, I'm not a fan. I don't like the huge volume. This is one that on a relative basis had topped back in March and has been moving lower. Maybe if that downtrend line breaks to the upside, maybe we'll have something. And we want to get through the 20 days. So let me just draw one line because in my opinion, this is a big, big level. See the move down here. We get a little bit of rally, and then we stop with this candle, this big red candle. We opened at about 267 or 268 that day. And notice where we went to today, intraday. Got up to about 266 and change. The 20-day moving average and price resistance is right there at that level. So there's no doubt I want to watch this area very, very closely. If there's one thing that's really nice, even though the volume is less on the way up, this is not light volume on the way up. When you look at that right there, that's pretty heavy volume when you go to any other part of the year. So if we can get through 267, I would feel a lot better about the stock. Until then, I would be very cautious.
I agree. Levi Strauss is the next one, LEVI.
All right. Yeah, do you think these healthcare stocks are going to bounce back, Mary Ellen?
They have a lot in the way of work to do, and I talked about that period when Clinton, prior to the elections, was talking about policy shifts, and those healthcare stocks for 8 months were in the doldrums.
Yeah, no doubt. I think some will come back. I'm not sure they're all coming back. So I think it's going to be a stock picker's dilemma or delight, depending on the way you look at it. Levi Strauss, first of all, it's gone public here recently. I don't trade stocks like this because technical analysis is a study of price history. Here we don't have much price history. So all I can look at is, I mean, maybe I could draw the gap support right here, and we came down, tested that, and held. But we've got gap support, price support between about 2130, 2190, the recent high 2450. I think that's the trading range. So if I was going to do any trading with this stock, I'd probably, if I was going to buy, I'd want to buy it in the low end of the range. And if I was going to sell, I'd try to sell it in the upper end. But until the stock trades a little bit longer, it's just hard to really get a feel for where this thing is going. I mean, I can't even tell if is this an uptrend or is it maybe starting a downtrend here over the last couple of weeks. We just don't have enough information. So I'd be careful to draw too many conclusions when we don't have much history.
Yeah. And then we have Texas Instruments.
Yeah, Texas Instruments came out with their earnings, and you can see pretty decent reaction. We broke out to new highs, which was nice. Pulled back on lesser volume. I think this rising 20-day moving average is going to continue to hold. It hasn't been a great performer relative to semis. So there are a lot better semis out there, like Teradyne, which I just talked about. But because the group's been so strong, Texas Instruments has been able to outperform the S&P 500. So taking a look at the annotation, once again, I think I would want to keep a fairly tight stop because I like other semiconductors better. So I don't want to sit there and hold if it starts to break down and it's not performing well on a relative basis. But I think the 20-day moving average and then this breakout that we just saw right here at about 112 or so, I think 112 up to about 114.5 is a key support zone. I wouldn't want to lose that. All right, we got another one, Mary Ellen. Okay. All right, let's take
next one, Tom, is IEF. Okay. IEF.
All right, IEF. Yeah, I like this pullback to the 50-day and price support. Let's do it on a different chart, though. Let's annotate this, and I think you'll see that breakout that we had right there. We go up, we break out above that 105 area, get up to almost to 107, and then we pull back right to 105, and now we're starting to move back to the upside. It's in a trading range. This is a Treasury bond ETF. It's not going to be a huge mover. So if you're trying to trade this and you just pulled it up on a scan, and you don't pay attention to the name, you might think it's a stock. It's not a stock. It's a bond ETF. These tend to move very, very slowly, so I'd never trade them personally. But looking at it technically, I do like this bounce off the 50-day, off a price support around 105, and I think we're probably going to head back up to test this overall high, probably around that 106.80, 106.90 level.
All right, and the next one we have is Network Appliance NTAP, NTAP.
All right, I know Mary Ellen took a look at this one. Yeah, I'm really not excited. I think we turned right at a gap resistance. I'm going to pull this up on a relative chart. So here are your computer hardware stocks. Yeah, I mean, you can see Network Appliance relative to its peers. It's much closer to a 52-week low than to a 52-week high. So got some issues there. Let me draw this a couple lines here. Okay, first of all, I think it's pretty clear when you go across here that 71, that area, 71, 71.5, has been a key area where the stock has pivoted. We saw it back all the way in May of 2018. We saw it again in October. Look at the gap go just below that level in November, couldn't get through. And then we finally broke through in April, and now we're back down testing this level. So the bullish argument is that we're above this support area, and hopefully we will turn here. But I see the last short-term breakout being around 69. So I would just say that this is a support zone, and you've got your 50-day coming up from underneath. But the bigger problem, I think, is the relative weakness of this stock. So even if you like the stock and it's pulling back, I would say you can keep a fairly tight stop, but it's not going to be one of your stronger stocks in the space. And so for that reason, I think I would pass on network appliance. And we got one more, or was that it, Zach?
Okay, we have one more, YRI.TO, Yamana Gold.
Which one? What was the symbol?
YRI.
Oh, okay, I got you.
.TO.
Yeah, actually, let me put it up here. YRI.TO. Yeah, we were just having a little bit of a technical issue with sound for Mary Ellen. We're hoping we can get her back here in just a couple minutes. All right, YRI.TO, Yamana Gold. Well, I talked earlier about the dollar. With the dollar strengthening, I'm not going to be a fan of any of the gold stocks. And I think that's being reflected with the recent breakdown here. So I'm just going to look at this 6-month chart. But I think you can see that it had pretty good support around 328 or so, maybe 327. After moving up here, this was a gap up, increasing volume. And each time we've gone down and tested this gap, we've held until about a week and a half ago. We gapped below that level. Look at the volume picking up, comes down. Now we're getting a little bit of a rally. But I think the two areas to watch here are the declining 20-day and the price resistance. So I think 320 to 327 or so is going to be a very difficult area for Yamana Gold to get through. So personally, I would pass. I'm not a big fan here. I think this is a stock that I would avoid, and really an area of the market that I would avoid. And I've been saying that for many years, really. Just because when the dollar's in a long-term uptrend, which I believe we remain in, gold, silver, materials in general, energy, all of these areas tend to underperform the S&P 500 in a rising dollar environment. So I'm going to pass. And that is the 10 in 10. So let's get that summary up for you, and then we will give you another market update before we go into our final segment. All right, so there are your symbols that just covered. And like I said, I thought Teradyne looked really good. That's one that I don't own, but is certainly interesting. And the other one that I really liked in that list was the first one, Kratos, KTOS. I just think defense stocks are starting to build some momentum, and that's a small cap. I think it's a small cap defense stock that's been outperforming or had been outperforming, seems to be getting its legs up under it again. So KTOS is one to watch. All right, let me get into the final market update for everyone. We do have the Dow Jones Industrial Average still trying to cling to some highs, or some gains, I should say, not highs. We're not quite at the high of the day, but we are at 26,467, up 5 points. The S&P 500 up 2, the NASDAQ down 13, and the Russell 2000 up 11. Again, this 1600 level has been a pretty big area for the Russell 2000. We're getting close. We're within 1%. A breakout there would just add to the bullishness that we have already been seeing in 2019. 10-year Treasury yield continues to be under pressure, down at that 2.50% area. Volatility down 3% today as the market recovers off the earlier lows. Material strong, energy weak, semiconductors weak. I changed out a few of the stocks here that I talked earlier about, Exxon and Chevron and Intel, I think. But here are 3 other stocks that are certainly making big moves today. Intuit, they came out and they talked about their earnings that are going to come out, I believe, in May. I didn't see anything bad in their announcement. I think they said they were going to be at the high end of their revenue estimates, but the stock got hit pretty hard earlier, but is recovering. I wouldn't be surprised to see it recover off of this into its earnings report. Ford came out with its earnings, really nice gap up here on Ford. This is, most of the autos I'm not big fans of, but that's a huge volume move to the upside. So maybe Ford's one I have to get back on my radar. And then VeriSign off of earnings, also very, very strong report there. Okay.
All right. Well, I'm back, Tom.
Hey, welcome back, Mary Ellen.
Pretty exciting. I've been watching, though, quite closely.
Well, no shakes there. As long as we got you back for this final segment, because I think this will be a fun segment where we get into the this stock or that stock. We've done this before. In the past, though, we've just kind of looked at stocks technically within certain industry groups. And so it was just like, do you like this stock or that stock within a group? This is going to be a little different because we're in the midst of earnings season. I say we go ahead and we take a couple of earnings reports that are going to be coming out next week. So a couple companies that are going to be reporting next week, and we take a look to see how we like those stocks heading into earnings. And I'm not a fan of trading into earnings reports, so this is going to be a little different for me. But I do use some of the relative strength tools that I have, some of those charts to try to figure out maybe kind of gain some clues maybe as to what's going to happen. So I tell you what, I'm going to let you go first, and I've got a couple stocks for you.
Okay.
And they both come out early next week, I believe. But the first one I'm going to give you is Alphabet, so Google.
Okay.
And the other one I'm going to give you is Apple, so two of the largest companies in the world.
Oh,
so
my goodness.
Earnings reports, what do you think? Which one of these two would you be most comfortable holding into earnings?
Okay. Well, I will say I like both of these. They're both, well, let's see. It would help if I could pull the chart up here. Let's go ahead and pull up. We'll begin with looking at a daily price chart. We can see the stock is looking very, very constructively. It's been a confirmed uptrend for quite some time here. I like the fact that it is poised to break out of this longer term base here. Let's take a look at it on a weekly, and you can see it's just poised to break out. That would be very, very bullish for the stock. Let's go ahead and take a look at Apple and see how that one stacks up. Not quite as dynamic looking. It's lagging a bit here. I will say with Google, analysts are raising estimates higher going into earnings. That is a constructive factor. We can see that Apple is also poised to break out of this space, but again, it's not quite as constructive looking. Your RSI and MACD are both positive, but I'm also thinking about previous sales, the whispers out there that iPhone sales are diminishing. I am going to go with Google.
Okay. Yeah, I think I'm going to agree with you, especially because it is in the internet space, which is we've already seen Facebook and Twitter come out with some really strong results. I don't like betting against Apple, and I'm not really betting against Apple as much as I'm just betting with Google. If we can get that breakout, especially today heading into earnings, I don't know. Sometimes you get head fakes, but I just think the way internet stocks are performing, I think I'm going to agree with you on that one.
All right.
All right. You got two for me?
I do. There are two companies that are due to report on the 30th. The first one is McDonald's, MCD. And then take a look at that, compare it to YUM.
Ooh, okay. So Yum Brands and McDonald's.
Mm-hmm.
All right. Well, on the McDonald's chart, what I'm looking at, and I know I talked with Aaron about this one, but I see an equal high. I mean, if you drew a line right across here and then an uptrend here, you've got a nice ascending triangle off of this move to the upside. So I think this stock already measures up to probably 207, 208, something like that, just based on this pattern. Restaurants obviously have been strong, but we're looking at two stocks within the group. McDonald's relative to the restaurants is just kind of doing okay. When I look across here, I see equal, a double bottom. I see basically double top and mostly sideways. So I just see McDonald's going along with the restaurant group, which is not a bad thing because the group has been strong. So let's pull up Yum Brands. On a relative basis, I see a little bit more movement to the upside here on Yum. I think Yum is performing better. So that's telling me maybe that analysts that maybe have visited these companies like Yum a little bit more. And if they like Yum a little bit more, then I like Yum a little bit more. So I'm going to go with a buy on Yum Brands. What do you think?
I hope that we're not boring, but I do agree with you on that. There are a couple of dynamics that are going on with Yum Brands. Certainly their concentration in a now blossoming, growing Chinese economy will help them, but they have much more in the way of robust earnings estimates. Analysts are revising those estimates higher for Yum Brand, whereas with McDonald's, it's downgrading. Analysts are downgrading going into the earnings, and it's a bit more meager as far as single-digit growth prospects. So
And I think too, when you look at the when you look at the market cap of the two companies, I mean, I think you have more room for growth in a stock like Yum Brands, which is $31 billion. McDonald's much higher. So I think we're on the same page on this one. All right, I got one for you.
Alrighty.
Company's reporting next week. And by the way, we're running a poll. Make sure you fill that out because some of these stocks that we talk about are included in that poll. So you have an opportunity to vote on which ones you like of some of these that we're talking about. Anyway, I'm going to go with MasterCard and Square.
Oh gosh. I think you'll know my with Square because that darn thing cannot get out of its own way. But this is MasterCard, and you can see the stock has been on a tear, and rightfully so. The company is making great strides in the credit card and payment processing arena, not just credit cards, it's B2B. There are tons of applicable areas where their new product offerings are just changing the face of consumerism, both business and retail. So, gosh, I just really like MasterCard. In case you can't tell, it's in a very confirmed uptrend here. RSI is quite positive, and this MACD is trending, remaining above that net neutral 0. Now let's take a look at poor Square. This is a company that is, I want to say, a wannabe. They're more in line with PayPal as far as their offerings. They did come out with a new product where they are going to be offering loans to their customers, but it is just lagging. The poor stock cannot get out of its own way, and it is continuing to deteriorate. And I believe, as Tom said, that there's a lot reasoning out there that could very well be, I would say that analysts are raising estimates or lowering them, but they're not. The estimates for this company are super robust. Analysts are raising it. It just can't get out of its own way. So whether the street knows something, I'm going to go with Visa.
Or MasterCard.
Oh my gosh, was it MasterCard? And I looked at Visa.
Doesn't matter. They're both I kind of like Visa too. But
I think I'll just choose whatever stock I want. Yeah.
Same. Yeah.
MasterCard. And I like to see, this is their last earnings release. They gapped up. It's a toughie, Tom, because this could be priced for perfection. We've talked about that, where Square's just kind of languishing and they do a little something and they jump. But
well, you just stole my thunder because I am actually against you, and I'm going to go with Square. And so I pulled up Square here. First of all, this is a 3-year relative chart. And so, yes, there's no doubt Square has been struggling here, as you pointed out, Mary Ellen, and you can see on a relative basis it's been struggling. But it's still, when you go through this relative chart on Square, it goes through these periods where it just explodes on a relative basis to the upside and then looks ugly for a while and then kind of struggles and then explodes and then does this. It's just rinse and repeat. I think on a bigger scale, that's what we saw in the fourth quarter because the market was so weak. We saw Square pull back. I think right now, as long as that relative low right there holds, I'm going to say Square. And the reason is that the financial administration stocks continue to be extremely strong. And I think expectations now have been lowered quite a bit on Square. And the other thing that I like about Square is off of this major move to the upside, I could draw in a reverse left shoulder, neckline, head, right side of the neckline. And I think it could be poised in the bottom of a reverse right shoulder to maybe take off. I don't think this company is just going away. I think it's been consolidating some massive gains. It was
there's a lot of good news out there on the company.
Yeah, and it was trading under $10 in June of 2016. And it went over 100 in October of 2018. So 10 times, it takes a company a little while, I think, to kind of grow into that. And so I think there could be a big surprise on Square. So
very interesting.
But I love MasterCard too. Let me show you this one. So on MasterCard, I always say I like these charts that go up from left to right. Well, here's its industry group relative to the S&P. Here's MasterCard relative to the S&P. MasterCard relative to its peers, its peers right here breaking out, and there's the absolute chart. I mean, what is not to like about MasterCard? I think it's great stock, and I think they're going to come out with great earnings. But like you said, I think they might be priced a little bit higher for perfection, and so that's why I think I'm going to go with Square.
Well, this will be fun to watch.
Yep. All right. So you got two for me?
I do. Yes. MGM.
Ooh. Okay.
Yeah. And then Denny's, DENN.
Wow. Okay. So grab yourself a Grand Slam breakfast and head over to MGM.
I like it.
All right. MGM. First, I got to say, gambling stocks have started to show life again. Here is the gambling index after trending lower, heading into the end. Second half of 2018, it was ugly, but we did break out of that, put in a higher low, and now breaking to a new high. So we're beginning to show a little absolute strength. Now, we do still need to break out on a relative basis. We're starting to strengthen again, but we haven't cleared that February relative strength. And when you look at MGM relative to the gambling stocks, it's going lower. So this one I have some concerns about because it's not one of the leaders in gambling stocks. And then the other one was Denny's?
DENN, yes.
All right. Denny's breaking out of a base like this with increasing volume. This one, too, had not been doing very well, but it's in a good area. It's in a much better area in the restaurants, in my opinion. Even though gambling's getting better, I still think I like restaurants more. And because MGM is downtrending on a relative basis in a group that's not as strong, I am going to go with Denny's. I think Denny's has a better chance of maybe some big earnings here. What do you think? Uh-oh. Did we lose you again?
Hi. Yeah, I'm going to go with MGM. And as you pointed out, a lot of these gaming stocks are starting to pick up. And it has a lot to do with Macau, with the improvement in the Chinese economy. So an expected pickup in some of these casino-related stocks. And the earnings estimates are super robust for the company. And I think they're doing a lot in the way of cost cutting and pulling back expenses. So I'm going to go with MGM.
All right. Well, I'm going to let you go ahead and grab the screen, and I'm going to give you two stocks.
He said ominously.
Yes, it is ominously.
Okay.
So I want you to take a look at, let's do Qualcomm.
Okay.
I think next Wednesday. And let's compare Qualcomm. Of course, Qualcomm's been in the news big time lately.
You bet.
How about Qualcomm versus Cigna Corporation, CI?
Oh, dear. Yeah. Okay. Well, let's start with Qualcomm. And here is the big news, of course, last week with the Apple dispute being taken care of outside of court. And then also the fact that they got together with Apple. So they're going to be providing the chips for the Apple iPhone. But the other big news for Qualcomm was that this 5G space for chips, Intel was their one big competitor and Intel dropped out. So super, super bright on the fundamental side. But let's go ahead and take a look at the chart. And for some of these stocks that have these huge gaps up, I like to look at the intraday because it's going to give me a better feel for whether this gap up period is retained. We're looking at a 1 hour price chart. The stock's been marking time recently, so the MACD is trending down toward that net neutral. RSI is still positive. So technically it looks super sound and potentially poised to even add on to their already strong move. Primarily or simply it could be something from management as far as guiding higher. So let's take a look at CI, and I think we're going to look at an entirely different chart here.
I gave you an easy one.
Oh, good. Oh, boy. Here we are. Okay, so yeah, Cigna, of course, is in with those health insurers, got totally thrown out of bed and is trying to reverse. I'll tell you what, UNH came out with really good numbers and the stock is still like a fighter flat on its back after being knocked out. I mean, it's actually seeing a bit of a bounce today, but yeah, Qualcomm.
Yeah, I kind of liked Qualcomm as well. I think that first of all, I suspect they're going to be raising guidance. I mean, that was a big deal with their settlement with Apple. That was a huge cloud that's been hanging over that company for quite a while. And then Intel came out and announced they are getting out of the 5G market. I think that is a double bonus for Qualcomm. And I think the reaction here that you're showing there on the screen, just the last week or two, that was it. That one big candle, that was at 3 o'clock when the announcement came out that Apple and Qualcomm had settled and that it was over, it was done. And you can see that initial reaction. I mean, this is a big, big deal for Qualcomm's business going forward. And so I think there's no doubt Qualcomm is definitely the one for me of those two.
Oh, good.
All right. I think we have time maybe to do one really fast. Did you have another?
Okay, I do. Yes. In the financial space, EZPW.
Okay.
And that's Easy Corp. And the other one is FDC. First Data. Yeah.
This one's a relative laggard in a strong group. So, this is not, I mean, it's in there with MasterCard, Visa, and so forth. I mean, this is a really nice looking chart. I like the volume coming in. It's been a laggard, but the volume's starting to pick up. So I think this one's got some hopes. And the other one was FDC.
Yes, that's right. First Data Corp. They're credit card processors.
I tell you, this one has been a better performer, but the relative strength, I think, on the other is actually starting to look better. This one's they're both in pretty good areas of the market, but this one on a relative basis has been lagging as it consolidates. I'm gonna go with EZPW. What did you think?
Okay. Yeah, I was intrigued with FDC simply because if you can see that gap up that occurred in the middle of January, that was all about earnings. And the company came in with a very strong report and with the ability to potentially gap up subsequent to that. I like to see that because the other gap up that occurred back in June, they do have a tendency to surprise to the upside. It's been marking time in a go nowhere period for a while. So I'm going to go with FDC.
Okay, cool. All right. Well, there you go. There's a summary. That was fun, kind of going back and forth. I generally trade based on companies that have already reported. I don't try to trade ahead of these reports.
Right.
I think that is like playing with dynamite. But as we've seen, many of these companies that have reported. But anyhow, there you have the summary. And now we're going to get into the poll, which basically was asking all of you to give us your thoughts. Which of the 5 companies on the poll would you feel most comfortable holding through the earnings report? And Marielle, you were really bullish about MasterCard, and I can't blame you. Mm-hmm. And that is the #1 pick. And I'm surprised at that.
Oh, wow.
Are you surprised?
I am surprised. Yeah, because Google and there are a lot of good names on there.
Yep. I would have guessed Apple.
Interesting.
I would have guessed that would have been the pick of everyone would have been Apple, just because Apple tends to be very conservative in its guidance. It did miss not too long ago, so that's very unusual. So I'm assuming they're even going to be more conservative. So I would be really shocked if Apple had a big gap down after its earnings report. So I figured that the majority would go with Apple, but MasterCard's not a bad pick, though.
Yeah. I think people are picking up on your Square thesis. So that'll be fun to watch.
Yeah, that one could be the biggest mover of all in either direction. I mean, who knows which way it's going to go, but that is going to be one report I'm going to be very interested to watch because it is in a strong space, but it is not one of the best performers in that space. All right, well, it is time to wrap up. I do want to just give you a quick update. You can see the Dow has recovered off those early morning losses, currently up 15, NASDAQ down 8, S&P up 3, and the Russell 2000 up 11. Mary Ellen, always a pleasure having you on the show. And
it's been wonderful.
Yeah, have a great weekend.
You too.
All right, I want to thank all of you for being with us today. Please remember to complete the survey as you exit. It's located below the video player. We love to get your feedback, hear what you think of Market Watchers Live. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Friday afternoon, everybody. Enjoy your weekend. Be safe. And hopefully we will see you back here on Monday. Happy trading.